Can just $50 a week truly replace your full-time job and generate $6,000 a month in passive income? Sounds absolutely impossible, right? Immediately, your internal alarm bells are likely ringing, questioning such an audacious claim. But what if I told you this isn't fantasy, nor is it a scheme, but a meticulously calculated, mathematically proven path available to almost anyone willing to take consistent action? Today, we're not just dreaming, we're breaking down the hard data, the cold, undeniable numbers. These will demonstrate how consistent, modest weekly contributions to two specific investment vehicles can generate a life-changing $6,000 every single month. Get ready to challenge every preconceived notion you have about building wealth and achieving true, liberating financial independence. For far too many, the relentless daily grind of a full-time job feels like an inescapable trap. We dedicate 8, 10, even 12 hours a day, year after year, hoping for that elusive next raise or promotion. But the harsh reality? Wages often stagnate while the cost of living relentlessly climbs. We find ourselves caught in a vicious, soul-crushing cycle, constantly trading our precious time for a paycheck that barely keeps pace. You might be feeling it, the gnawing fatigue, the frustration, the anxiety about retirement, or simply the profound desire for more time, more freedom, and more control over your own life. This work-until-you-drop mentality isn't just cynical, it's a very real financial forecast for millions. We chase the next pay bump just to keep our heads above water. But what if there was a profoundly different way? A structured path to build an income stream so powerful it doesn't just supplement your salary, but fundamentally surpasses it, granting you the ultimate choice and true autonomy. Well, there is. And the true secret isn't hidden in complex options trading or risky ephemeral meme stocks. It lies instead in two of the most straightforward yet profoundly powerful investment instruments known to modern finance: VOO and VTI. These aren't exotic, high-barrier assets. They are remarkably accessible, broadly diversified index funds. They allow you to own a significant piece of the entire U.S. stock market with remarkable ease. For decades, these robust vehicles have silently, steadily built colossal wealth for millions who leverage their immense compounding power. They represent a fundamental paradigm shift from actively earning your income to passively generating it. No more clocking in. Instead, your hard-earned dollars diligently work tirelessly for you, 24 hours a day, 7 days a week. We're talking democratized access to consistent market growth, once reserved for the ultra-wealthy, now available to everyday investors like you. In this video, I'm going to meticulously walk you through the precise mathematical journey from a humble $50 weekly contribution to that awe-inspiring, life-altering $6,000 a month in passive income. We'll begin with the initial investment, carefully chart its projected growth, integrate conservative historical market averages, and reveal the exact financial milestones you can realistically expect to hit. This isn't theoretical fluff. We're going to pull back the curtain entirely on the astonishing power of compound interest and the strategic impact of dividend reinvestment. I will show you how these foundational financial forces synergistically coalesce to create an unstoppable financial snowball effect that will utterly transform your financial future. Expect crystal-clear, step-by-step calculations, highly detailed projections, and a completely transparent look at the practical timeline involved. We'll dissect how VOO and VTI, through their inherent diversification, extremely low costs, and consistent performance, become the undisputed engines of this incredible wealth-building machine. Prepare to see the numbers laid bare, proving this bold claim is not only possible, but demonstrably within your intelligent grasp. So, if you're genuinely tired of the relentless hamster wheel, if you're yearning for a future where your time is truly your own and your financial destiny is self-directed, and if you're ready to stop just dreaming about financial freedom and actually start building it, then this video is your unequivocal wake-up call. This isn't just information, it's a direct, profound challenge to your current financial trajectory. It's a challenge to stop accepting the status quo and to actively start leveraging the proven power of smart, consistent, long-term investing. Consider this your personal, urgent invitation to a definitively better path, a path where your future isn't dictated by the anxiety of your next paycheck, but the robust, ever-growing wealth you've systematically built. Are you ready to see precisely how a seemingly small, consistent commitment can unleash a life-altering financial tidal wave? Let's dive in and unlock the secrets to replacing your job with powerful, consistent passive income. All right, let's pick up right where we left off. You're ready to transform your financial future, and it starts with a surprisingly simple yet profoundly powerful action: consistently investing $50 every single week. This isn't some complex market maneuver, it's the foundational fuel for your wealth engine. $50 a week might sound like a small sum, but let's break it down. That's $2,600 invested annually. That's $2,600 you're purposefully removing from consumption and redirecting into wealth creation, day in and day out, week after week. This consistent contribution, this disciplined commitment is the bedrock upon which your financial independence will be built. Now for the real magic, unleashing what Albert Einstein famously called the eighth wonder of the world: compounding interest. Many hear the term, but few truly grasp its exponential power, especially when harnessed over time with investments like VOO and VTI. Let's use a realistic historical average return for these broad market index funds, which over decades has hovered around 9.5% annually, including reinvested dividends. Imagine your first year. You diligently contribute $2,600. With a 9.5% return, your initial $2,600 grows to approximately $2,847 by year's end. Not bad, right? But here's where compounding truly flexes its muscles. In year 2, you add another $2,600, bringing your total contributions to $5,200. But now, that 9.5% isn't just applied to your new money, it's applied to your entire balance, including last year's gains. So your $5,447 from contributions plus previous gains now grows to roughly $5,961. By the end of year 3, with another $2,600 added, your total balance leaps to over $9,374. You've contributed $7,800, but your account balance is already nearly $2,000 higher than your total deposits. The gains are beginning to outpace your contributions. This initial stage, the first 10 to 15 years, is where you build the foundation, the snowball, as we like to call it. It can feel slow at first. Your annual gains in year 1 might be just $247. In year 5, your portfolio, after 5 years of contributions totaling $13,000, could be sitting at over $17,000, with market gains accounting for more than $4,000 of that sum. The critical point here is that as your balance grows, the 9.5% return starts yielding progressively larger dollar amounts. For instance, in year 10, with cumulative contributions of $26,000, your portfolio could easily be pushing $40,000. At this point, your annual gains from the market could be over $3,000, more than your entire annual contribution. This is the tipping point where market gains begin to significantly outpace your active contributions, building momentum with every passing year. The silent accelerator supercharging this compounding effect is dividend reinvestment. VOO and VTI, as collections of hundreds of large, profitable companies, pay out regular dividends, typically quarterly. While seemingly small on a per-share basis, VOO's current quarterly dividend is around $1.58 per share. Reinvesting these automatically buys you fractional or even whole new shares of the ETF. Let's say you own 100 shares of VOO. That's approximately $158 in dividends every quarter, or $632 annually. Instead of taking that cash, you instruct your brokerage to automatically use it to buy more VOO shares. At $400 a share, that $632 buys you another 1.58 shares over the year. Now you own 101.58 shares. The next quarter, you get dividends on 101.58 shares. This seemingly minor tweak means your principal is growing not just from your weekly contributions and market appreciation, but also from the dividends themselves, which are constantly acquiring more underlying assets. It's a continuous, self-feeding loop that dramatically accelerates your share count and, consequently, your future dividend income and overall portfolio value. Finally, let's talk about a common psychological barrier, the too small mindset. Many look at $50 a week and think it's insignificant, too meager to make a real difference. This couldn't be further from the truth. History, mathematics, and the sheer power of compounding consistently prove that consistency and time far outweigh the initial capital size. Starting with a seemingly small amount, like our $50 a week, but sticking with it for decades will generate vastly superior results compared to someone who waits 10 years to start with a much larger lump sum. Your future self will thank your current self for starting now, regardless of the initial sum. This isn't about how much you start with, it's about the relentless, consistent commitment to the process, harnessing the unstoppable force of compounding. Are you ready to see how this snowball transforms into a financial avalanche that sets you free? That snowball we talked about, it's not just growing, it's about to transform into the financial avalanche that sets you free. Welcome to the path where your $50 a week commitment matures into a $6,000 a month passive income empire. First, let's clearly define this monumental goal. $60,000 every month translates to a formidable $72,000 annually, a life-changing sum for most. To generate this sustainably, we apply a widely accepted financial independence principle, the 4% safe withdrawal rate. This means you can comfortably withdraw 4% of your portfolio's value each year without depleting the principal over several decades. So, how large must your VOO/VTI portfolio be? The math is simple. $72,000 in annual income divided by 0.04 equals $1,800,000. This isn't an arbitrary figure. It's the financial bedrock required to secure your $6,000 monthly paycheck. Now, let's tackle the journey to accumulate that $1.8 million. If you consistently invest $50 every week, that's $2,600 annually. Leveraging VOO's historical 10% annual average return, including reinvested dividends, the trajectory unfolds like this. After 5 years, you'd have approximately $16,900. After 10 years, that grows to about $41,300. By year 15, your portfolio could reach around $81,400. Pushing to year 20, you're looking at approximately $149,800. After 30 years, you'd hold around $430,000. And finally, to reach the full $1.8 million mark with only $50 a week consistently, without increases, it would realistically take around 45 years. This timeline shows the incredible power of consistency, but also highlights how accelerating contributions can drastically shorten your journey, which we will explore next. This $60,000 a month passive income isn't just a number. It's a direct challenge to the conventional 9-to-5 grind. Consider a typical full-time job paying $70,000 to $80,000 per year. After taxes, deductions, and premiums, your take-home pay might hover closer to $4,000 to $5,000 a month, often less. Your passive $6,000 a month, however, predominantly comes from qualified dividends and long-term capital gains, which are taxed at much more favorable rates, often 0% for lower to middle income brackets or 15 to 20% for higher earners. This tax efficiency means your passive income delivers significantly more purchasing power directly into your pocket. More importantly, this passive income brings unparalleled financial freedom. No more stressful commutes, no demanding bosses, no fixed schedules. It's the ability to design your days, pursue your passions, or simply enjoy a life where your time is truly your own. But what about the ever-present concerns of inflation and market volatility? This is where the inherent resilience of broad market index funds like VOO and VTI truly shines. Historically, the stock market represented by these funds has delivered average annual returns of 10 to 12% over the long term. Even after accounting for an average inflation rate of around 3%, your VOO and VTI investments have consistently outpaced rising costs, preserving and even growing your purchasing power. Diversification across hundreds, even thousands of companies provides a built-in shock absorber against individual company failures or sector-specific downturns. This means your $6,000 a month income stream isn't just a static figure. It's designed to adapt and grow, safeguarding your financial future against both the erosive effects of inflation and market fluctuations. Let me introduce you to David, a real-world illustration of this journey. David started his journey at age 25, just like many of you might consider today, with a humble $50 a week channeled into VOO. He quickly grasped that while $50 was a powerful start, accelerating his contributions as his career progressed would be his secret weapon. By age 30, only 5 years in, David's diligent saving, coupled with VOO's growth, saw his portfolio reach an impressive $60,000. He wasn't just investing, he was increasing his weekly contributions whenever possible. 5 years later, at age 35, David celebrated a $250,000 milestone, his portfolio now at $250,000. The compounding effect was visibly accelerating. By age 40, his VOO holdings had soared to $700,000, a significant leap, demonstrating how momentum builds. David continued to push, consistently increasing his investments. Finally, at age 47, just 22 years after his initial $50 weekly investment, David's portfolio crossed the $1.8 million threshold. This enabled him to generate his $6,000 a month in passive income, allowing him to redefine his work-life balance. David's journey isn't just a hypothetical scenario, it's a powerful illustration of how starting small, staying consistent, and strategically increasing your investment over time can lead you to financial independence far sooner than you ever imagined. It's about building an empire, one consistent contribution at a time. You've seen the numbers. We've meticulously walked through the data, demonstrating how a consistent, disciplined investment of just $50 per week into diversified index funds like VOO or VTI isn't just a hopeful dream, but a calculated, attainable path to financial liberation. We've shown how this seemingly modest sum, compounded over decades, can explode into a portfolio generating over $6,000 per month in passive income, far surpassing the average full-time job salary. This isn't magic, it's the power of time, consistent contributions, and the relentless growth of the market working in your favor. This strategy is simple, accessible, and profoundly transformative, laying the foundation for an empire built one consistent contribution at a time. So, how do you begin this journey? Your very first crucial step is to open a brokerage account. Think of it as your personal investment gateway. For beginners, reliability, low fees, and user-friendliness are paramount. I consistently recommend platforms like Vanguard, Fidelity, or Charles Schwab. These aren't just names, they are industry titans, trusted by millions, offering zero-commission trades and an incredibly straightforward setup process. To get started, simply visit their respective websites. You'll typically need some basic personal information, your social security number, employment details, and bank account information for funding. The entire process often takes less than 15-20 minutes online. For example, opening a Fidelity brokerage account involves clicking Open an Account, selecting Brokerage Account, then following the prompts to enter your personal details, link your bank, and digitally sign. It's surprisingly quick and designed to be intuitive. Don't let initial unfamiliarity deter you. It's far simpler than you might imagine. Once your account is opened and funded, the next step is executing the investment strategy, buying VOO or VTI. This is where automation is key. Within your brokerage, navigate to the Invest or Trade section. Search for VOO, S&P 500 ETF, or VTI, Total Stock Market ETF. Then you'll select Buy. Crucially, you'll set up recurring investments. Most platforms offer an automatic investment plan or recurring purchase. Here, you'll specify your $50 weekly amount and the frequency. Every week, $50 automatically transfers from your bank to purchase VOO or VTI shares or fractional shares. This automation is critical. It removes emotion and ensures unwavering consistency. Imagine 52 transactions a year systematically building your future empire without you lifting a finger after initial setup. You consistently contribute to your projected $6,000 monthly income, building wealth relentlessly and effortlessly. This hands-free approach guarantees long-term success. While the core strategy is simple, let's briefly optimize it. First, consider your account type. For tax-free growth in retirement, a Roth IRA is often superior if you qualify. Your future $6,000 monthly income could be entirely tax-free. If you max out Roth IRA limits, currently $7,000 for 2024, a taxable brokerage account is your next option. Secondly, and crucial, is long-term commitment. This isn't a get-rich-quick scheme. It's a get-rich-slowly and surely plan requiring patience. Our $6,000 month projections were based on decades. You will encounter market fluctuations. Mentally prepare for dips. Resist panic selling. Volatility is normal, an opportunity to buy more shares at a discount. Stay consistent, stay invested, and trust the process. This disciplined approach is the bedrock of your financial freedom, transforming $50 a week into a powerful $6,000 a month passive income stream. So what's your next step? The blueprint is now meticulously laid out. The mathematical certainty is there. The only variable now is you. Don't delay. Start today. The most powerful factor in compounding is time, and every single day you wait is a day your money isn't working for you. Open your account, set up that automatic $50 weekly contribution, and commit to this powerful long-term vision. Imagine the future you, living without financial stress, enjoying the tangible fruits of your consistent effort. If this video has genuinely inspired you to take action, please hit that like button. Share your starting plan in the comments below. I want to hear your commitment. Subscribe to Josh Invests for more data-driven strategies that empower you to build significant wealth. And for even deeper dives, check out my video on best brokerage accounts for beginners linked here, and understanding index funds, VOO versus VTI explained, to solidify your knowledge. Your financial future isn't just possible, it's actively waiting for you to build it, starting right now.